Welcome to the 28th installment in Trading Strategy Guide's Trading Education series. Today we're going to talk about support and resistance. What is it, how to recognize it, and how to profit from it. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education series. Today we're going to talk about one element of technical analysis, support and resistance. And be sure to stay to the end of the video and I'll show you the dream trade for this week. Let's do it. Support and resistance are regarded to be the basic foundation of technical analysis. Learning about support and resistance is probably one of the most important steps in learning technical analysis. Support and resistance describe where the money is. So what exactly are support and resistance? The simplest way to think about support and resistance is that they are price areas where the market changes direction or has stalled repeatedly. These support and resistance levels can give us some information about the strength of the trend. Support is another word for buyers and is a price level or a price zone from where the market has bounced. Think of support as the floor. At a support level, the demand side or the buying pressure is bigger than the supply side or the selling pressure, which is the reason why the market will stop falling and reverse. Support levels will always appear below the current price. Resistance is another word for sellers and is a price level or price zone from where the market has sold off. Think of resistance as the ceiling. At a resistance level, the supply side or the selling pressure is bigger than the demand side or the buying pressure, which is the reason why the market will stop rising and reverse. Resistance levels will always appear above the current price. Take note that typically the bigger the market reaction from these support and resistance levels, the more significant the support and resistance levels are, and the greater the buying or selling pressure is. What makes support and resistance so important? Well, no matter what strategy you're using or what time frames you're trading or even what market you trade, support and resistance are vital because they identify areas in which you will find large buy and sell orders. The horizontal support and resistance levels are not calculated by some mathematical formula. It's calculated by you using your eyes to figure out areas in which the price is struggling. One major problem with technical indicators is that they are placed based on a formula, so you as a trader don't have much say in where the lines are placed. This is a problem because Forex is market driven by traders, buyers and sellers. So using support and resistance that are identified by buyers and sellers is way more accurate. I'm not trying to say that Fibonacci levels or pivot points are useless, just that freehand support and resistance is more accurate. The reason why drawn support and resistance is more accurate is that it's what the smart money utilizes. Banks and institutions look at their charts through support and resistance. They make buying and selling decisions based on support and resistance. Ultimately, the big boys are the ones who drive the markets, and when they step into the market, their large orders leave behind footprints in the form of support and resistance. So if you're in a trade, you want to be in a trade with the big boys because they are the smart money. Okay, I'm going to shed some light on a few lesser known facts concerning this very important trading concept. The most important misconception novice traders, as well as a few professional traders, make is that they draw support and resistance lines by focusing on the left side of their charts, and then they just come up with a bunch of random lines. It's very important to understand that the right-hand side of your charts is much more important than what has happened in the past. The most recent price action is always more important than historical price action. So when we draw our support and resistance lines, we always start on the right and then work our way back to the left. Secondly, we need to identify important swing highs and swing lows from where the market had a significant reaction and then start drawing our support and resistance levels. Now, instead of using single individual lines, we use support and resistance price zones, which are a better representation of the market supply and demand equation. Those of you who have been here a while may be familiar with Tim's trading maxim number 6. A line is never just a line, it's always a zone. The price is dynamic, and due to the market volatility and the momentum that changes constantly, many times price will overshoot our support and resistance levels. So in order to tackle this issue, we use price zones instead of a single price. The support and resistance price zone will capture more of the price action and is a much better frame of reference and a more efficient way to read the market. I also want you to understand this. Just because the market bounces or reacts off of a price level, it doesn't give it the authority to be a support or resistance level. What we really need to see is a strong reaction away from these support or resistance levels. I call it a violent reaction. And a violent reaction typically includes long wicks and long candles. Another form of support and resistance is provided by the big round numbers. The round numbers are also known as psychological numbers because major market players execute buy and sell orders around these levels. The round numbers are ultimately numbers that have a significant psychological impact. An example of round numbers: 1.2000, 1.2500, 1.1000, etc. You'll recognize what all these numbers have in common, right? They're all round at the end. They all have lots of zeros in them. The main reason why round numbers work, it's rooted in human nature and in our inclination towards simplicity. Another big reason why the round numbers act as support and resistance levels is that the central banks have been known to use exchange rate targets in the form of big round numbers. For example, the Euro-Swiss franc at one time had a floor of 1.2000 that was removed in 2015. When the exchange rates move above and beyond these exchange rate targets, the central bank will often intervene in the forex market to curb any excessive price deviation from their targets. Also, round numbers are used as a profit target because of their simplicity. If a big institution or a hedge fund is looking to buy or sell Euro USD around 1.1878, they are likely to round up or down their order to 1.1900. You can choose between two trading styles when trading off of support and resistance levels. The most popular support and resistance trading style is when traders are expecting the support or resistance to hold any sell-off or rally from going further and possibly producing a reversal of the prevailing trend. For confirmation purposes, it's best to wait for the candle closing price before entering a trade just to make sure the support or resistance levels are holding the price. The second support and resistance trading style is when traders are expecting the support or resistance to be broken and the market to continue in the direction of the prevailing trend. Contrary to the popular belief, the more a support or resistance level is tested, the weaker that level becomes, and the higher the probabilities it will be broken. I also want you to understand that a broken resistance level will often become a new support level. Inversely, a broken support will often become a new resistance level. The support and resistance levels can help us make sense of the price movements, and once you learn to correctly identify and use them, it can improve the way you trade the markets. Support and resistance levels are usually very important turning points in the market where the price has shown a very clear reaction, and we can use that knowledge in the future to time our trades. The reason why support and resistance levels work is because they mirror human psychology and the supply and demand balance in the market. That's all I've got on support and resistance for today. Next week, we'll continue talking about technical analysis when we dive into trend analysis. Now let's take a look at the Dream Trades. Dream Trades is a service from Trading Strategy Guides. Just a quick overview, the Dream Trades app shows you selected stock issues that meet the Dream Trades criteria. The stocks are selected by their trade volume and other fundamentals, and also by the price with respect to the 50, 150, and 200-day simple moving averages. The trade suggestions are divided between bullish and bearish signals. And here are the dream trades we've been following. Arcosa Inc. or ACA is reaching up toward our second target right here at 50.19. When it hits that, I'll move my stop up 5% to around 47.91. I'm going to close this trade when it hits plus 20% profit, which is about 54.75-ish. B2 Gold or BTG still going sideways here. I'm not giving this much more leeway before I shut it down and put my money in something that's moving. I am still in this right now though. Lumentum Holdings or LITE also going sideways, but I'm going to give this a little more leeway because of this really bullish candle on Tuesday right at the top of the range. So hopefully this thing will break and go up towards our first target. If it doesn't do that in a couple of days, I will shut this one down as well. Camping World Holdings or CWH closed back below the 50 on Monday. I know of no dream trade rule to shut this trade down here, but if it continues to struggle to get back above the 50 like it did on Tuesday, then I'll shut this one down too. As I've mentioned before, I'm recording this video on Tuesday afternoon. It's just after 3 p.m. New York time, so the market is getting close to the closing. Garmin Limited is looking pretty good and doesn't look like it's going to trigger today. Here's the chart for Garmin Limited or GRMN. It's been pushing up for about a month now, so that's nice. Currently attacking the 50. It's hit the 50 on 3 different days here. So we're looking for a candle close above the 50 with decent volume. I want to see at least 50% or better volume. Be even better if it was a big volume spike. And that'll be our buy signal. Taking the dream trades is simple but requires a bit of analysis. Just about 30 minutes before the market closes, or about 3:30 New York time, take a look at the charts for all the calls in the Dream Trades app and find the ones that have been trending in the correct direction. Also, ideally, you want to see a spike in the volume on the breaking candle. For a buy, look for a candle close above the 50 SMA. When you take it, your stop loss will be 90% of the entry price, and your first target will be 105% of the entry price. If the price starts going sideways, close it and move on. That'll allow us to put our equity in something that's moving. When price hits the first target, I move the stop loss to break even. I do not close a portion of the trade like I do in the trade pick strategy. Each time the stock moves 5% in our direction, I move my stop loss 5% up so that it will always be about 5% behind the current price. And that's our dream trade for this week. If you want more information about dream trades, just click the link in the description box below. Be sure to come back next Wednesday at 3 p.m. as we continue to discuss technical analysis. It's going to be a blast. Don't miss my Trading Picks video on Monday. And of course, this Friday, we're starting a new segment called Tim Black's Strategy of the Week. So be right here at Trading Strategy Guides YouTube channel Monday, Wednesday, and Friday at 3 p.m. for our videos. Be sure to subscribe and hit the bell so you'll be notified when the videos come out. Have a great Wednesday, and I will see you with a strategy on Friday. Trading Strategy Guides YouTube channel Monday, Wednesday, and Friday.